So, dear colleagues, a warm welcome to this year-end presentation for AFRY. I'm really happy that you have taken the time to spend this 1 hour with me. I will be joined with Bo Sandström, our CFO, and also the divisional heads that will take you through the performance in the fourth quarter, because as you know, we did release our year-end report this morning. So that's the plan for the next 60 minutes. And again, a really warm welcome to this presentation. I will start with the quarter four highlights. And the big highlight in quarter four that we did deliver really strong growth. Total growth in the quarter was 20%. It's an all-time high, and the adjusted organic growth was 11%, and that's impressive numbers. And of course, this is coming from a strong demand driven from the industrial transformation, the energy transformation, but also, I would say, stable demand in infrastructure in general. Some pockets we see that it's a bit more, like real estate in some areas due to the situation with high inflation and interest rate. But I would say in general, there is a strong demand. So here I think we did really good work to ending up on that strong growth. And that ended up to 6.6 billion in net sales in the quarter, a really impressive number for our company. On the EBITDA, we delivered 578 million Swedish crowns. That was also 15% growth compared to a year ago. And margin was 8.8%, slightly lower than last year. What we have done in the quarter, we'll get back to that in AFRY X specifically, we have basically taken some write-downs for now repositioning AFRY X to where we want to have it. We will hear more about that a bit later on. And of course, now moving forward, we will continue to leverage from the strong demand, but of course work on cost control. Pricing will be key because of course we feel also the salary inflation. And just before I move on to the year-end, looking on the full year, I think on many of these KPIs we have reasons to be proud, but there's one important one where we are lagging behind, and this is the margin, EBITDA margin. Bo will cover it a bit more, but it's clear now that some of our peers have also released their quarterly reports or the year-end reports, and we are lagging a bit behind. It's not, we have areas in AFRY that is doing very well, but we are also having areas that is lagging behind our peers. And this is also where the market is punishing us from. So if you follow the market development today, even though on total we look fairly okay, it is the EBITDA margin, what that we have really had as a focus for a long time, that is lagging behind. So moving forward, you will hear a lot about how do we also improve our EBITDA margin. Full year then highlight, we ended up in a full year also with a strong growth. It was a year with a lot of uncertainty, starting with the war in Ukraine and a lot of macroeconomic uncertainty. But still throughout the year, we felt it was a strong demand. So also full year, we ended up with 17% growth and just about 8% adjusted organic growth. And this is also, I've been in the company now 6 years. From an organic growth perspective, it's the strongest year we have had so far. So I think you all have done a really good job to drive our business and deliver that strong growth. We were able then to deliver 1.8 billion in EBITDA, equal to 8%. And actually, we are coming back to the pattern we saw in quarter four, that our EBITDA margin compared to year before is actually going down. And this is also where there is a lot of questions. Why are you not able to transform that strong top line into margin, EBITDA margin? But again, I mean, we should also be proud of delivering, 23.5 billion in net sales, and I mean EBITDA in absolute terms is stable, but we have this about how do we transfer top line growth to margin. That's a key KPI for the market following AFRY, and this is something that you will hear now even more moving forward. How do we jointly work to improve our margin? Throughout the year, we have announced and concluded the cost program in infrastructure and partly on group. We have also done 4 acquisitions, adding 600 million in 2022. And we also came to an agreement of divesting our Russian operations, still waiting for governmental approval. Some of the highlights for 2022. But looking on the year, strong top-line development, stable EBITDA, but again, our margin is challenged. So this is something that we jointly need to work on. Market in general, you know that better than me, but in general, strong market. I mean, when you see the industrial transformation, the energy transformation going on, stable in many areas, also on the infrastructure, we see a continued strong demand for our services. Of course, we follow the market closely because there are clouds with inflation and interest rates going up. There are clouds, but following us and many of our peers, many industrial companies, many report really strong and good numbers in this quarter. So we just need to take all opportunities we can to push for growth. But again, how do we transfer that growth into EBITDA margin? I will really do this quick because then you will hear each division. But you know, there are 3 divisions sticking out very positively. Process industry, energy, management consulting, simple story, strong growth, solid or strong margins. Okay? Infrastructure, we have worked to bring margin up for quite some time. We are proud on the growth, but we are lagging behind on the margin. And then we had some problems in Finland. We are using more sub-consultant. You will hear more about that. But this is, of course, something that we will continue to work on, how to swing infrastructure margin up. IDS, you will hear it from Robert. We had 1 big write-down in a project affecting in the quarter, more sub-consultant. And then AFRY. Here we have had higher attrition affecting the top line. And we have also taken some write-downs on software products. 3 divisions strong. 3 divisions that had some effects in the fourth quarter. We will now need to get back on a positive development on the margin. You will hear it from the divisional heads. Then, of course, order stocks are higher than ever. So that's the good news. So moving into this year, of course, with a strong order backlog, that's helpful. So how do we now execute those order stocks in a good way? These are 3 very interesting projects that we just want to highlight. The first one, it goes into AFRY, and this is a cooperation with Stockholm local traffic, probably what you call it, where we together with them, we have been chosen as a digital partner to develop their system for traffic information. A really cool project, absolutely what AFRY is all about. Second one, Liquid Wind. This is a very interesting project also here in Sweden. We are helping them to build a factory in Sundsvall. And it's all about supplying the shipping industry with green electrical fuel. So that's also a cool project. And the last one in Finland, in Oulu, also in the core of the core, there's a conversion project using that machines or for renewable packaging material. So all these 3 projects kind of mirrors the transformation going on where we at AFRY are at the best. And of course, there's many more projects that we could have highlighted here. Finally, before I leave it over to Bo, we are proud of the development in AFRY when it comes to area of sustainability. And we are as a company receiving a lot of rankings, different sustainability rankings. I would like to highlight the last one, which is called the CDP. And in the CDP ranking, we did receive a leadership ranking for our work with climate change, climate actions. So I think this is just an evidence that as a company, we are doing a lot of progress in the area of sustainability. So with that said, I will invite Bo Sandström, our CFO, to take you through the overall finances. A warm welcome, Bo.
Thank you, Jonas. Really happy to be here and excited to have then presented my first quarter in that sense, even though it was the last quarter of last year. So I will, like Jonas said, I will cover main AFRY financials and I won't go all in detail on the division. I will leave that to divisional heads. But I will start with sales. So, as Jonas said, we ended up with sales of 6.6 billion in the quarter, and that's more than 1 billion higher than in Q4 last year. Noteworthy is that we had astonishingly 20% growth, second quarter in a row with 20%, and also second quarter in a row with more than 10% adjusted organic growth. This quarter at 11.3. So growth was then, to get to those numbers, driven from all segments. So it was across AFRY strong growth, and they were supported in a sense both by volume and by price. And we estimate price increase to support the growth with approximately 4% this quarter, which is somewhat lower but still in line with what we saw in Q3. So in relation to order stock, we, as Jonas said, a record level of order stock ending the year, all-time high. So that of course then brings some comfort on net sales also going into 2023. Shifting to EBITDA development. Whereas net sales development were all good and shiny, when we come to EBITDA development, a little bit more mixed picture. EBITDA 578, and as Jonas said, was 15% higher than last year. Then diluting the margin somewhat to 8.8%. So then looking at the 8.8%, what could you expect in a sense, everything else alike with a growth of 20%? Well, you would expect an increased margin rather than a decreasing margin. And that's also the reason, as Jonas said, why we are to some extent question on that in the market. But then taking the other perspective, we were in relation to taking the growth to EBITDA in quarter four, we actually did the best out of the 4 quarters during this year to actually maintain the margin level despite the very high growth. So some good and some bad in that sense. 3 characteristics of the fourth quarter in terms of EBITDA. We have some one-off items in the group, as you usually do in Q4. Typically, we highlight 3 main areas in that sense. We have a positive one-off taken in the group, in Group Common, and we have a negative one in IDS, and another one in X. And I'm sure we will hear a bit more about those coming forward. We also highlighted the increased use of sub-consultants. Clearly with that type of growth and fairly high attrition levels, we need to use sub-consultants in a higher rate than before. That's also pressuring the margin, and this is particular in Infra and in IDS. And then, as Jonas said again, a rather seasonally weak performance, utilization driven in Infra Finland. And I'm sure Malin will talk about that a bit as well. All those things affecting the margin, in a sense, pressuring the margin relatively in the quarter. So then looking at very briefly development by division, and this is then kind of laying out the overview, looking at growth on the left side, adjusted organic in that sense, and the margin also then compared to last year on the right side. And I'm not going to go into all the details, but here you can clearly see when you put those characteristics together, you kind of see the different clusters that Jonas mentioned as well. So you have the 3 divisions, high growth and high margin. You have process industries, you have energy, and you have management consulting, all with EBITDA margin above 11%. At the same time, you see our 2 biggest divisions in terms of infrastructure and IDS with a margin of around 8% in the quarter, but still then with a solid growth. and AFRY X then with some special characteristics in the quarter, leading to fairly low growth and low margin in the quarter, but with other reasons for it. So in addition, to understand this picture, since this is covering the divisions but not the group-wide, you should consider that we have somewhat higher allocation from group to division this quarter compared to previously. Not drastically affecting the picture, but still to be considered. Finally then, looking at cash and debt, this is also an area which is both positive and negative from a market perspective. We ended up with a net debt ending the year with 4.6 billion. So that's sequentially, as we say in financial words, comparing to last quarter, that's lower where we were at 5 billion. But looking a year back, it's more than 1 billion higher in terms of a year-over-year comparison. We have a main financial target on the debt side, which is net debt to EBITDA. That's measured then in times. And we ended the year with 2.3. That's actually a bit lower than our financial target, which is at 2.5. So how is this quarter then, kind of rated from a cash and debt perspective? Well, we had a strong cash flow we had a positive cash flow in the fourth quarter. As you can see, our net debt level has decreased. But in comparison to an exceptionally strong Q4 last year, it's still a somewhat weak cash flow development in the quarter. We are growing, and we're growing substantially, and that ties up cash. But clearly, we were not as good as at collecting revenues and getting movement in the cash flow in the fourth quarter as we were last year. And that's in a sense just how it is. If you still look at what is our liquidity, our liquidity is very strong. If you accumulate our liquid assets, unutilized credit lines, they end up at more than 4 billion at year end. Then more on the, as a financial note, the board is then proposing a dividend for next year, and they're proposing a maintained dividend as compared to last year. With that, I will leave back to you, Jonas.
Thank you, Bo. Thank you for that. And before I leave it over to the divisional heads, just as you said, Bo, it was the last quarter and the full year for AFRY, but it was your first quarterly report, and I have to say I'm super happy to have Bo in AFRY, and I think it's been a rock and roll start, Bo, with the year-end closing and an interesting quarter, but well done to Bo. But I also want to highlight the whole financial community that has been working, to close the year end with all the challenges, but handling also different systems. So well done to all of you that have contributed to the whole closing process. And you could highlight a lot of people in Bo's organization, but also in divisions and everyone. But I think you have done a fantastic job. So thank you all of you for doing that. And so that with that said, let's leave it to the divisional heads. And as always, we will start with Malin, who will talk you through infrastructure performance. So here you go, Malin.
Thank you, Jonas. Let's see. So, Division Infrastructure in Q4 and year 2022. Let's start with the net sales then, or the growth. And we saw solid growth in the quarter in all countries, and that was based on not only stable demand, because that is what we see on the market, but also that we were growing in FTEs. We were increasing prices due to a lot of effort and work by all of you. And then, of course, also that, again, the market was also good in many areas. A good start then. So net sales in the fourth quarter ended then with 2.4 billion, with a margin which I will come back to later, but with a total growth of 19.8% and adjusted organic growth with 10.4%. And that is really good, because if we go back a couple of years, we had a challenge with the growth, and now we have proven that we can do it. But there are a lot more than, and I will soon come into that regarding the EBITDA, because we need also to be able, as Jonas talked about earlier, to get the profit with us more also from the growth part. But I'm of course super happy and proud that we see order backlog that are all-time high on all our markets, and also that we are able to support and deliver on our clients' needs. I think that's a good start. And again, all our BAs, they contributed to the double-digit growth. So thank you all for that. Getting into the EBITDA then, the quarter amounted to 193 million with a margin of 7.8%, which was under what we were sort of committing to deliver from the team. And I think based on, to start with, we saw an underlying good sort of path in all the KPIs. And we have had sort of a focus on improving the EBITDA for some time. And we can see that we are on our way, but we are not there where we would like to be yet. So we have a lot of work to be done. I know that we have closed the cost program that we have sort of delivered upon, but there are some areas that has sort of not gone in the direction that we want. And just to mention a few, we have much more sub-consultants, which also driving the net sales up. And there we don't have the margin that we would like to have. And of course, that dilutes the EBITDA. And the second is Finland, that both Bo and Jonas talked about. I know that the day, or was it the 2nd or 3rd of July, when we had this CryptoLocker attack on our business, on Vahanen business in Finland, that was not the best day in our lives. And after that I know, and I would like to send a special sort of thank you to the team in Finland, because I know that this has not been easy, because what happened was that everything was locked and you have to redo everything. You have to change computers, systems, etc. And we are still not through that. So again, we will soon be out of that, and we have redone everything to the clients. But we need to speed up that as well, and I would just say that we will support as much as we can so we can finalize that work. But of course that is not sort of normal, and that's something that is not sort of an underlying sort of trend. It's something that is affecting this quarter. So 2 areas that are really affecting in the opposite direction, performance in Finland, but also the sub-consultants with less margins. One thing that is sort of going in the right direction is of course the attrition, and that is also moving towards, I would say, a positive path on all markets, and that is good. And I know that you have done a lot of good leadership activities in relation to that, so continue to do that. I mentioned a little bit about the market earlier, and we see a strong performance and also strong solid market in transport infrastructure. We see somewhat weaker in the real estate, not only in Sweden but overall. And I think that what we have started to do is that we have tweaked also the portfolio, moving from some private into more industrial clients together with the rest of the divisions. And I really sort of appreciate all the work that we can do jointly also moving forward. So with that said, there are of course many examples of business that we have delivered, and I would like to mention one specific project, and that is Transport Infra in Sweden, Dingesjö-Kvickenborg. And of course there are many more that we have won, so big thank you to all of you. But again, I just want to emphasize, we need to focus and continue to focus on our margin, and we will continue to work with that sort of plan that we have already started. And I'm sure that we will then sort of see much larger and bigger effects moving forward in 2023. So big thank you to the team so far, and I know that we have much more to go for and do. So thanks.
Thanks a lot, Malin, and also thank you to the Infra team. I think the starting point now, I mean, with that strong top line growth is, you know, much more favorable than, as you said, Malin, a year ago when we were also fighting with growth. But again, how do we turn that top line into margin will be, you know, that's our priority. But okay, thank you, Malin, for that. And then we will go to Industry and Digital Solution, and then we'll invite Robert, who's also here, to take us through the Q4, Robert.
Thank you, Jonas. Then I should change the slide. I hope I do the right one. Yes, I did. Fantastic. So the markets continue favorably for in Q4 for IDS, and this was converted into roughly 10% adjusted organic growth, which in itself is a satisfying outcome. Now, what we are targeting is profitable growth, which means that increasing volumes should be translated into more of profits. Not only that, but also more margins. And clearly in Q4, we are stumbling, and we do not meet this ambition. From a margin point of view, it is fair to say that we have a bit of challenging comparisons with last year. That is true. But the main event in Q4 this year, last year, 2022, is still that we had to make a larger write-down in one of our client projects. This is very painful, and luckily, with a bit of historic perspective, a bit unusual. Looking at the full year of 2022, we have been seeing a huge demand for engineering resources, and we have also a bit of, sorry for that one, but also the fluid, and in combination with the fluid labor market, this has caused both an operational as well as a financial challenge for IDS. We have been able to mitigate the high labor turnover with very effective recruitment. But this is kind of obviously causing a lot of costly inefficiencies. The ability to source talents and capacity from the AFRY partner network is really a massive asset, and it has been effective in order to respond to client demands and also keeping our commitments to them. But it comes with less of contribution margins compared with having own employees. A major event in the Q4 for IDS was the rollout 2 of the new AFRY ERP system, which is now covering roughly 1/3 of the total AFRY business. And I want to express my deepest gratitude to everyone involved, and specifically to the financial community, not only for making all these excellent preparations, but also staying really persistent in adopting and learning new ways of working. Getting back to markets and clients, Q4 was continuing really strong. Our rolling 12-month order intake for the division has expanded by almost 20% during all of 2022, and we did collect a record amount of orders in December, in the month of December. This means that the demand was continuing strong throughout the quarter, which is a bit in contrast to what we read about in the news. We read about uncertainty and also concerns about the economic climate. Pricing remains a key topic, and in Q4, average fees were contributing positively. This is all good, but the need for further pricing activities remains high. I would say not only because of the kind of inflation is continuing all around us, but also because we firmly believe that pricing excellence or pricing activities or pricing execution, call it whatever you would like, this is absolutely a hallmark of operational excellence. So to conclude, at AFRY or at IDS, we stay firm with our view that business is a team sport. We do believe that the best is yet to come, and we do look forward to what Q1 will bring. Thank you.
Thank you so much, Robert, for that. And again, looking on IDS, I think the top line growth is really strong. Then we had this project that affected the margin. As you said, Robert, market is favorable. Let's see that hopefully we're up for a good start of the year then. Thanks to the IDS team, and thank you to Robert. Then I will now move over to Process Industry and Nicholas. Actually, this is a division where it's more about how do we secure, continue on the high level on margin, but also push for growth, Nico. Congratulations to another strong quarter, Nico, to you and the team. I leave it to you to go through the quarter, but also how you see the market and how you see us moving forward. Are you there, Nico?
Yes. Can you hear me?
Yes, I hear you. It's all yours, Nico.
Excellent. Very good. Thank you, Jonas, and thank you for the great comments. And of course, it's a teamwork, as you say, and the Peat family did a really great job. Of course, we delivered a good result, as you see, but there is still room for improvement related to EBITDA margin. That's for sure. But the overall market activities, they remain on a high level, and of course that supports our order stock growth, and it's on a high level, which of course supports the growth as well. And we were awarded with some bigger capex projects like this Stora Enso Oulu paper machine conversion to board. But then as well, when we look this liquid wind basic engineering, which of course is, as many examples, prerequisite for bigger projects in the future. And we have quite many activities in the development phase, and which then again supports the bigger implementation projects. But the net sales in the Q4 amounted to 1.29 billion, and that's an increase of 20.9%. And also this growth was driven by these big capex projects in North America and Latin America, Finland, and Central Europe as well. And the EBITDA then amounted to 148 million, and the margin was 11.5%. And of course, the target is to improve the EBITDA margin, as said, in all business units. And of course, the smart pricing is a key, and also the smart spending. So we need to look our costs and how we are traveling, internal traveling, minimization, etc. But then as well, the key is the successful project delivery, because through the projects we make, of course, the biggest amount of money, and we try to avoid the claims. But overall, I would say this good result is really by excellent teamwork. And of course, this competence and resource sharing and common working processes, those enable us to reach the next steps in also the digital project implementation, what we have in the strategy for 2025 to be global in use. And this year, of course, we strengthen the base sectors and also develop further our sustainable mining, hydrogen, batteries, and textiles. And of course, when we look these smart solutions, they offer a great opportunity in going up in the value chain in the services. And of course, this sustainability and digitalization, health and safety, and also this efficiency improvement, they are important part of the project deliveries as well. But in short, I would really thank the Peat family for the contribution, and let's continue this good work and improve the EBITDA margin. So we all are making future. So thanks a lot, and back to you, Jonas.
Thank you so much, Nico, and again, congratulations to a strong quarter. And I like to say that, we can still improve the margin even though it's on a good level. So that's a good thing, Nico. And I agree with you on the market. I mean, I actually met a few of your clients the other day here in Solna, because Protac, as is a company that we acquired, offering digital systems for optimizing the production, mainly in the pulp and paper industry, was here. Really good dialogues, and I will meet a few clients next week, hopefully in Brazil then. So I think the whole process industry, as you said, Nico, including mining and metals, textile, of course, Power-to-X batteries. It's a super interesting segment where we see a lot of transition and where AFRY is in the center of that. So really interesting market, and good projects, Nico and the team, and full speed ahead. So good work. Now,
Thank you.
Thank you, Nico. Bye. Now over to Lindan Energy, and here I also think really strong performance from the energy division again. This is really interesting. And I know that Linda, you are not here in the room with us. You are somewhere else. So maybe you will tell us where you are, and then we look forward to hear your view on another strong quarter in energy, Linda. So it's all yours.
Thank you, Jonas. So yes, greetings from Asia, I would say. I been here now for a week and a half, meeting clients, conducting workshops, but of course meeting all our great people here. And I must say it's such a warm and welcoming environment, and I'm so happy to see about the strong position that we have here in Asia, and sort of see it firsthand when you talk to clients and meet the people here. So very happy to be here. Back to the quarter four then. For us, a strong quarter. We, as you know, we have struggled a little bit with the growth historically, but now we are clearly on a growth track, and we can see that in the quarter where we had strong growth, and adjusted growth of almost 9%. And we got the margin as well of 11.2%. I would say the general market outlook for energy is very promising. It's driven by the energy transition, about all these investments in the decarbonization and so on. So it is a good market, and we also take our share of that market. And in Q4 we saw it especially in hydro and in energy thermal, but we can see it overall, I would say. Our order stock is on a continued high level, actually all-time high level, and I would like to highlight a couple of examples just to see what we're doing around the world. And from our hydro business, we continue to secure a lot of pump storage projects, the important storage component in the energy systems. But we also won a big new build hydropower plant in Laos. Our nuclear operation, they won a project at Ringhals, modernization of the waste facility plant. I would like to highlight this project because I think here we can really sort of bring out the full AFRY flavor, because in this project we actually have employees from all 6 divisions. So this is a great example on our unique selling point when we bring all of AFRY together. Our T&D business also secured a lot of projects in the quarter for the like Svenska Kraftnät, Energinet, Austrian Power Grids. But I would say overall the distribution companies. And also in, for example, in Ireland, we won 2 large solar projects, and we are acting as owner's engineer for solar clusters. So these are examples sort of how we meet the market. So we will use this strong order stock that we have. We will continue to combine it with tight cost control and also very focused project execution, because we have large projects in our portfolio. So with that, I see that we can continue to drive margins, because we have now pushed up our target corridor going forward. Yeah, so to summarize, I mean, the energy sector is strong. Our overall portfolio is strong and well positioned. It consists of a good mix, I would say, of all energy production types, the distribution and the storage. So that's good. So I would absolutely like to thank the whole energy team for making this happen. We delivered a strong Q4. I know it took hard work, and you're very committed to this excellence. So thank you all the team players, and I wish you a nice weekend. Back to you, Jonas.
Thank you so much, Linda, and thank you for that sunny story. And it looks like you're sitting in a very sunny place, Linda. But I also have to say to the whole energy team, but because when you go back a couple of years when we took a decision to work a lot on the margin development and the growth was not there, then you guys improved the margin, and now we push for growth. And of course, at the same time, the market is very interesting. So I think this is just fantastic. I'm really proud of you guys, what you are doing, but also, as you said, Linda, the potential we have ahead of us. So good work to all the team, and let's keep on pushing in the energy segment, because it's actually in the core of AFRY. So well done, Linda, and have a good weekend also in Asia, and thanks to the whole team.
Thank you.
So then we are moving over to AFRY X. So this is a division where we have been working throughout last year with a lot of changes, and we took some write-downs in the quarter, but I will let Per Christian now to talk you through the quarter four. So Per Christian, it's all yours.
Many thanks, Jonas, and dear colleagues. I'm happy to present the fourth quarter of the first year of AFRY X. The net sales of AFRY X landed at around 327 million, equaling a total growth of 11.6% or 2.4% adjusted. The EBITDA of the quarter was 7 million, corresponding to a margin of around 2.3%. And that was significantly below the expectation, mainly due to a significant write-down or write-off coming out of our software business. And those 10 million certainly shaved off a great part of our profits. For the services business standalone, the fourth quarter delivered an EBITDA of 29 million, corresponding to a margin of 9.3%. Whilst that is a decent performance, I fully trust that with the focus we have on improving profitability and sales, there are absolutely rooms to improve our profitability levels. We do see relatively stable markets for IT services. And a testimony of that is the fact that in the fourth quarter, we actually added 25% higher volumes in terms of new signings compared to the same period the previous year. And these were deals and volumes coming out of our big and key accounts, main accounts, including Ikano, Länsförsäkringar, FMV, and Volvo, and beyond. So a huge shout out to all of you who made that possible. Many thanks. So whilst this is good, I also would like to share that looking a couple of steps ahead, we certainly understand that there is more unpredictability coming. So we certainly need to ensure that we have full focus on building pipe, on closing deals, on upping profitability. And given those performances, I trust that we will be able to meet our goals. In the previous quarter, we discontinued our emerging software business. The market conditions for such long-term investments have significantly changed, and regrettably, we had to face up that reality. However, smart forestry will remain, and this is a key focus for us going forward. So all in all, having terminated or discontinued our emerging software business, we will see that our burn rates will go down significantly. So we will be looking at very different numbers coming out of X in 2023. In conclusion, whilst we have faced some challenges over the last quarters, I remain optimistic that we have very interesting opportunities ahead of us. And given our focus on future-proofing our business, on driving sales, on upping our margins, and on retaining and attracting the right type of talents, that will power our business in 2023. Many thanks, and over to you, Jonas.
Thank you so much, Per Christian, and I agree with you. Looking back on 2022, we had to take some decision, do some changes, but I would say now in 2023, I think we're off for a good journey. Will be a lot of work, but I think 22 was a lot of changes, but I think now stability and driving operation improvement will be key. Then I'm really impressed, but also happy to see the orders that we are bringing in. We just highlighted this order to Stockholm, this SL order, but I also hear, which also Linda said, that there are for sure how we ensure that we can work together between divisions, business areas, business units, countries is key. And there are things that we need to improve, but I also hear a lot of examples when we actually have more divisions, like also AFRY X meeting a client with a product when we can use the whole power of AFRY. So I hear more and more of those examples, and that's of course really great. Well done, Per Christian, and we are looking forward to a more stable year with also improvement on the financials for AFRY X. Then,
Many thanks.
Yeah, thank you, Per Christian. Then let's go over to the last division, Management Consulting. And this is another, I would say, sunshine story, Roland. We are getting used to that when it comes to the Management Consulting. So I leave it to you, Roland, to talk about that, and also what do we have ahead of us?
Yeah, first of all, Jonas, many thanks for the introduction. And you are right, we had another strong fourth quarter, solid growth, strong growth, while keeping the margin really at a good level. And I'm super happy with that. The entire team is super happy with that, because the fourth quarter is nicely complementing the full year. And because 2022 was an important year for us, we were able to drive growth, we were able to keep the margin at a really good level, and we were also able to bring the business above 1 billion. And this is, you remember when we started the journey 2019 after the merger, the entire team was saying, and we were talking about it, let's bring the business, let's bring Management Consulting to the next level, let's bring it above 1 billion. And now we are there, and of course we are not stopping with that. Our ambition level is high, and I know that the team is working hard and is pushing hard, as we have done it in 2022 in the fourth quarter, and of course also going forward. We are driving the business and the growth along 4 strategic dimensions. One is simply to gain market shares by being better than our competitors, by developing new services, being at the forefront of the development. And I have to say that just only in these 2 areas of hydrogen and future biomaterials and bioproducts, the team have done an incredible good job. Just only thinking about that, we have done more than 100 hydrogen projects last year, and all different from market analysis to strategy type of work. And just only think about what it would mean if we could take a share in many of these when it comes to the implementation, because many of these projects, of course, are also resulting in engineering type of work. The third one is to build up our international platform. And as Linda was saying, yes, Asia is also for us a very important market, because a lot of developing is happening there. And a lot of our European clients are present there, and they want to contribute, they want to push the development further. So yes, Europe, Asia, and also in the US market, where so much is happening, both in the energy transition but also in the transition in bioindustry. And then it comes to this 4 services, so 4 strategic areas, 4 type of services: market analysis, strategic advice, operational excellence, and transaction services. And it's good to see that with this service offering and with the strategy we have outlined, we are on one hand building a stronger position in energy and in bioindustry, but it also allows us to go into connected sectors like future mobility or industrial decarbonization. So therefore, I would say that for 2022, and of course for the fourth quarter, we simply executed what we promised. And therefore, I'm super happy with all this passion and the team, the devotion, the bravery, and the teamwork. But not only the teamwork with an MCD, but also how the team is connecting the dots with many colleagues in all the different divisions. And yes, there is a tough competition because we are working in sectors where so much is happening. And you can imagine that many of our competitors in the consulting market, they are looking at us, they are looking at our teams, and they want to also to take a bigger part of the business. So therefore, yes, we are aware of competition towards projects, competition toward talents, but this is simply what we have to manage going forward. So thank you to all of you in MCD, but of course also thank you to everyone here in the call, because I truly believe, yes, management consulting is a little bit a different type of business, but we can all benefit it. We can benefit by bringing this strong engineering expertise, digital expertise into our projects, but I think also the other divisions can benefit when we are working in strategic assignment, investment strategies, that we can hand over leads, and then we can, of course, also get a much bigger part of these projects, knowing that the engineering projects, of course, are much, much bigger going forward. With this, back to you, Jonas.
Thank you so much, Roland, and I agree with you. I mean, I'm so proud of management consulting and the business and the journey we have done together since we came together in 2019. And I mean, first of all, the business such now is above 1 billion, and you grow fast and you deliver strong margins. And we have super skilled people. We need to secure that, and the sector is super interesting. But of course, as you said, then when we combine the focus that we have on bioindustry, biomaterials, and energy, and combine that with our process industry division and energy, and all you three divisions are, fully global. So that way, that kind of cluster is for AFRY, of course, very interesting. And I think the management consulting, you get a lot of leads that affects also infrastructure and industry and digital and AFRY. But I see that's one cluster, as you said. And of course, we have infrastructure as one, heard Malin. And then when you look on industry and digital and AFRY, Swedish-based, also in Nordic, and how can we take a few niches internationally? So, I mean, we are a company based on a decentralized structure, 6 divisions, many business areas, business units, but also when you go on a higher level, you see basically 3 different clusters. And I think we are well positioned at AFRY, both on a global, in some areas, Nordic, Europe, and also in the Nordic. We'll get back to that, but well done in management consulting. Congratulations to a strong quarter. So focus going forward. Of course, there's a strong momentum in the market. We need to grab that. But at the same time, and we said it so many times, it is for us, me, for Bo, the divisional heads, but also for you guys to keep a good eye on a margin improvement. Because you see the market right now, and we mean the investors, they are punishing us a bit now, because compared to peers, we are lagging behind. Just to remember that. It's some areas we are strong, some areas we just need to fix it. I know there are programs in place. We are doing it together. You win together and you take the challenge together. But that's a clear focus. So cost control, pricing will be key. How can we increase the fees to our clients? How can we sell better value? How can we increase prices? Because we feel salary increased. The inflation, you feel it. So that's something that we all need to work on. Of course, then, how do we attract talents, and how do we also develop our people? How do we make sure that our people can be involved in different interesting assignments and so on? And then finally, we will continue to do those focus investment that we need in our operational platform. So this is a joint responsibility for everybody in this call then, to keep an eye on this. But I think if there's one thing I want you to remember, okay, strong growth, you should be proud of that. But it is 2023 that we already are a month into, a bit more. We need to bring our margin up. You will hear that a lot. It's not one problem or challenge, it's a joint that we do together as a team. And coming to that, in the next coming month, you will be invited into different things. We will invite you. First of all, we have a Capital Markets Day here in Stockholm in March. And this is again then, investors and analysts are, they want to have some answers on, we are doing a good development on growth, but again, some of these challenges that we have talked about, how do you fix the margin is one thing. But we have a capital market discussion here in March. And then we will also invite you guys to a leadership conference, a digital one, when we will also talk about the strategy moving forward. So you will get an invitation of that. And then we are also planning some Making Future events, probably around summer and into the fall in our key countries. And we will also have a team place meeting later in the spring. So there will be some events when you will get invited to that will also clarify a bit on the strategic plans we have. We will also open up for dialogues. How do we work even better together? Because I talked to one of our employees in AFRY, say, what's really the highlight of being in AFRY? And she said, when I meet a client and I feel that I have 19,000 colleagues backing me up, then I feel that I have a superpower. So how can we find a way to use that superpower is of course a question that we need to continue to work with. But pay attention to the invitations. Hopefully we will then have some good dialogues moving forward. Final slide is that keep an eye also on the Inclusion and Diversity Week that we have starting on March 6th. Important topics where also AFRY have a very strong position. How do we drive the inclusion, the inclusive workplace, diverse way of seeing things? Because this is key. This is key to create a great culture. It's key also to attract talent, to retain our people, but also actually to deliver good products, that you have diverse teams. So this is something you should be paying attention to, and we are really proud of that week, but also the work we do in that area. Final note, thank you. It took 1 hour. You heard a lot of information today, and I want you to remember, be proud of what we have done in 2022. It was a year with a lot of uncertainty and changes, different in different divisions. We delivered strong growth. At the same time, remember one thing. It's the margin, EBITDA margin, that is our challenge. So let's take that as a joint responsibility into 2023. We have a fantastic position in AFRY. Market is strong. We have great people. So I think it's in our hands to work on the areas that we need to improve and then leverage from the strong position we have. I'm so proud to be a part of this company, and I think we have a great future together. Thank you so much for listening, and I wish you all a fantastic weekend. Thank you so much.